Coming into 2023, clearly there are probably firms that are going to struggle to raise capital, or are not going to be able to kind of survive. And I think, like other major corrections in technology markets historically, right, that process can take up to a couple of years. And so whether it's specifically contagion of loan books or other things like that, I can't say, but I do think that there will continue to be businesses that shut down. I think also there's a kind of question whether enhanced government and law enforcement and other scrutiny is going to put more challenges on certain players in the market and maybe cause some further distress from that. But I think overall, right, we're really starting to put 2022 in the rearview mirror and differentiate between the technology and technology innovation, the good actors from the bad actors, the well-regulated players from the unregulated players, and I think that's really putting into contrast what the go-forward world is going to look like.
And just as you look at 2023, more in the near term, are there any potential stress points you're concerned about at all in the broader markets, over the next few months?
I think there certainly is a question about how particular regions or governments are going to start to regulate in this space. That's not a few months thing. I think that takes a lot longer. So that's sort of something that's sort of looming over a lot of different players in the industry.
And just in terms of, I was at a conference last week, a crypto conference, and a lot of the chat was, actually how much reputational damage has been done to the industry after, in particular, what happened with FTX and Sam Bankman-Fried as well. You seem to be fine at the moment, but in terms of the broader industry, have you seen any kind of reputational impact?
Well, I think it is a real hit. I mean, I think especially when you had, so many significant people backing, FTX, and there's a lot of egg on people's face, and I think there's a lot of soul searching going on, around that. But I do think at the same time, right, that's going to put a lot more scrutiny on, who are the companies that are well run, well capitalized, that well regulated, have strong auditing, have strong controls, all the things that matter if you're running a global financial institution. People are going to really start to pay attention to that versus just kind of believing kind of fairy tales.
And so just a final one on the broader macro here, 2023. What's your outlook here? Do we get a sense of recovery, or is this a year in which sort of things just kind of hobble along somewhat?
Well, so I'm not so focused on the speculative trading of commodity assets. Like that's an area that a lot of people are focused on. As you know, with Circle, we've always been very focused on how do we build a practical digital dollar infrastructure that runs on the internet, that runs on blockchains. It's kind of boring, stable, pushing that forward. So not so focused on price action, things like that. My background is as a technologist, so I'm very interested in what are the technical innovations that are happening in layer 1 blockchains, layer 2 scaling solutions, new technologies for privacy, security, identity. These are the really interesting things. And so I don't see any of the technical innovation slowing down. So from that perspective, which is really, I think, the most important perspective, is the kind of arc of this technology continues at the same pace that it had in the past, I think.
But stablecoins, having said that, so far have really become the backbone of trading. So as you develop with Circle, as you look forward with USDC, what is it exactly, or what are the sort of key areas over the next few years you feel that your technology, your product's going to have an impact in real world, in the real economy?
Well, so, we actually just launched today the State of the USDC Economy report, which covers a lot of things, including a lot of new data about the characteristics of USDC relative to other currencies like the traditional US dollar in FX markets or financial markets, and speculative versus non-speculative use cases. And what we found is USDC is actually less used for speculation than even the dollar itself on the FedWire system. Importantly, though, there are stablecoins that are very much focused on trading, and you can kind of see the amount of turnover that they do in centralized exchanges. USDC is far more distributed. 70% of USDC is held by externally owned accounts and wallets, which is a measure of its disbursement amongst users. It also has a strong traction as a store of value. So people around the world that want a digital dollar that they know is trusted, safe, secure as a store of value, that's important. But increasingly, we're finding the biggest payments companies in the world, Visa, MasterCard, Stripe, Block, WorldPay, others, integrating USDC into their infrastructure. So our view is that this technology is going to become a core settlement technology on the internet with both traditional fintechs, payments companies, and increasingly we think major digital wallets around the world are going to connect to this as well, just as a better way to move money on the internet.
So let's talk about the regulatory picture. That's something you're quite heavily focused on. There's a lot of debate. How should stablecoins be regulated? In what manner? I know over in the US there's talk of, well, stablecoins should be FDIC insured bank type of systems, the issuers. They should be regulated. You've said in the past that you're open to being regulated somewhat like a bank. So what does ideal regulation for your industry, for a company like yours, look like to you?
Well, the good news here is that the Financial Stability Board a couple of years ago set forth a set of policy goals and recommendations for stablecoin regulation. And major markets from the UK to the EU to Singapore to Japan and now the US are moving to put those in place. And they're relatively consistent. And what's being discussed, and you've seen it in multiple bipartisan bills that have been put forward into committees in Congress and are being actively looked at, is a framework for national, federal regulation of stablecoin issuers, a very clear definition of the reserves, transparency, reporting, being held to kind of bank grade enterprise risk standards, and I think that's totally appropriate, and we welcome that. And I think with the new committees being formed with Congressman McHenry, what I called the McWaters bill, which was Waters and McHenry together, I think we'll start to see that reintroduced. And there's a real shot at getting stablecoin legislation in the United States, which is really critical for this industry moving forward.
How long do you think that's going to take? You speak to regulators regularly. I mean, what are they saying right now? Because there is one part of the sort of side looking at regulators going, well, they've been talking about regulation for so long. Nothing's really kind of moved on from there. Particularly in the US, we're seeing something different in Europe with MiCA, but in the US, are regulators just happy to let sort of this space burn to some extent? Or, is there a real impetus to want to regulate parts of the market, in particular stablecoins?
Very clearly there's going to be regulation on digital fiat like stablecoins like this. That is happening. It's going to happen. And I think of all of the activity in this space, payment system innovation built on cryptographic forms of money, that is here to stay. I think markets regulators and sort of, having exchanges register, having different types of entities act as broker-dealers, securities dealers, whatever they end up classifying, commodities brokers, I think you are going to see a lot more action there. Some of it's going to be through enforcement, some of that's going to be through rulemaking and interpretation, some of that's going to be through law. So there's absolutely going to be more regulation through the multiple means and tools that regulators have. But I think with stablecoins, it's something that really does require new statutes, and so I think we'll see some movement on that.
And just one of the sort of points I heard from a few academics recently, interestingly, is that, well, stablecoins for now, you're backing the stablecoin with real-world assets, treasuries, and fiat, and other assets as well. But there is concern that actually, if there was any kind of run or collapse on a stablecoin, as they become more and more integrated with the real economy, you could see, as a result of a wave of redemption, selling on things like treasuries, that could impact the bond market and other financial markets as well. Is that at the moment a concern for you?
It's highly exaggerated,
yeah,
and I've seen some of that. The liquidity on the Treasury bills market, what that would probably be representing is a run on U.S. Treasuries, period. That wouldn't be specific to stablecoins. Let's say the U.S. government's defaulting. I wonder if that could happen. And people start to worry about the government's ability to repay short-term debt, things like that. I think the impact of that is going to be far greater on the many, many trillions of dollars in various types of treasury markets, as opposed to $50 billion, $100 billion stablecoin markets. And frankly, that's ultimately the reason why the design of these is so key, is that if you're able to have, the backing of only the most liquid, lowest risk, short-term government debt or cash, even potentially cash held at the Federal Reserve, that is the kind of foundational base layer of money on the internet that I think people are going to be confident in. It's not a bank IOU. There's no credit behind it. And so I think that's the right foundation, and I think would be viewed as one of the safest things in the world.
So money held with the Federal Reserve, sort of bank-like in many respects, but sort of slightly different regulations.
Well, banks obviously may hold money at the Fed, but then they go and create 8 times that money in the form of loans and IOUs.
Interesting.